Hello everyone, John Coleman here. Can you believe it? It's February already. Thank God January is out of the way. But right, this is going to be quite brief today, but there are two really important messages that I want to get across in this message. The first is obviously before Christmas, the central bank came out with rules or came out with guidelines in that banks could now lend 4 times salary. Um, Rightly and understandably so, everyone thought that it was a given that based on that the banks would certainly lend 4 times salary. That unfortunately, as things stand, is not the case. The banks have taken a very conservative view, and they now at this moment in time seem to be more concerned about risk management than making actual profit. Now they make profit by lending more money, but risk management is obviously very important as well. In the past, they got lambasted for reckless lending, so they are taking a very conservative view. So the banks will, in theory, give 4 times, but it is subject to scrutiny. So the shorter the time period, the less likely they are. If you have a lot of kids, again, less likely to give you 4 times. If you have other loans, less likely to give you 4 times your salary. So it is not a given that you will get 4 times. It is their guideline, and they are working towards that, but subject to all other lending criteria that they look at. So again, if you're interested in getting a full understanding of where you stand right now, just drop us a mail and we will give you an updated roadmap. Um, the second thing, and is very related to this, is as well as qualifying for the mortgage, you always need to be able to demonstrate to the banks that you can meet the repayments. Okay. Now, last year when rates were lower, that was easier to do because the repayment wasn't going to be as high. With rates going up, it's very important that you start saving now as if rates had gone up by 2%. So that if it's 6 months before you're ready and rates had gone up, well, you're able to demonstrate to the bank that you can handle this, that you can meet this. So it is something that you should be doing. It, as I mentioned previously, it is something that you need to be taking into account. You need to factor in, if rates go up, can I afford this? What's my real budget in relation to what I can afford on a monthly basis? But if you want the maximum amount possible, you do need to be showing an ability to save on a monthly basis. And I would be advising strongly to do it more than that would be required at this moment in time. That kind of leads on again to the interest rates. They went up again yesterday by 0.5%, and they have signaled another 0.5% increase in March. So all these things need to be taken into account when you're coming up with your plan or your roadmap for buying your home. So if you want an updated roadmap or you have any queries around what I said, just drop me a mail, and of course I'll be here to help. And we will have hopefully some good news next month. Talk to you soon. All the best. Thank you for listening.